Let's bring on board Mayuresh Joshi, fund manager at Angel Broking. He joins us on the show right now. And Mayuresh, what a disaster. Mayuresh, what a disaster. Not like the street was expecting anything great, but this is a little shocking how badly hit the cigarette volumes have been.
Morning, Aisha. Clearly, yes, I think a disappointing set of numbers, though I think a lot of analysts on the street were penciling in a reasonable amount of cigarette volume degrowth to take place. But I think the EBIT margins that have probably come through, I think were a far bit disappointing than what one really expected. Having said that, probably if you look at the other businesses as well, I think the other FMCG businesses grew marginally at 7%. Now you can take excuses of Chennai, you can probably say competition was around, but yes, I think the other FMCG business was disappointing. Add to that, I think the agri business has not done well. The hotels business, I think, has not done well, and it's only the paperboard business, because of lower input costs, which have probably performed marginally better. So again, I think the entire expectations from ITC in terms of their cigarette being the cash cow is still persists. I think you're probably going to see some amount of pain still exists within the system, and you're probably looking at price hikes not being taken, probably to maintain their market share. And clearly what happens in the budget in terms of rate hikes will again be an overhang onto the stock. So clearly I think the numbers have been disappointing for ITC and the stock will underperform.
Okay, Mayuresh, going to start with Indigo. Now the most cherished, the most followed stock, more like a cult stock, suddenly crash landing 20% off. Nothing wrong with Q3 numbers, but Q2 numbers horrible, poor and pathetic.
Oh yes, Nikunj, and again I think if you look at the larger picture, you're probably looking at the load factors at 84%, so that's a positive that one can really take out from the numbers overall. You're probably looking at the passenger growth happening at a much faster clip, but again let's understand the fact that the rates or the price tickets have basically declined, and that can be for a couple of reasons. Here you're looking at competition probably come through, and probably you're looking at the lower ATF prices being passed on to consumers. So clearly I think within the pack, as I've always maintained, Indigo is one of the most profitable airlines. The fleet size is one of the youngest, so the operating costs remain pretty low if you do a comparison check with the other two airlines. Clearly I think the balance sheet is in a much better shape. But again, I think if you look at historically how airline stocks have moved, I think it's more to do with how ETF pricing has been, and B, I think on how the demand factors turn out. So clearly I think this quarter was supposed to be the best one, Q3 that is, but clearly I think going forward again there might be some amount of pressure points coming through in terms of how volume growth takes place and what happens with the load factors. Nothing to take away from the fact, I think it's got a very decent market share, market leaders probably within the Indian domestic industry, but clearly I think these factors will be an overanchor to the stock.
Okay.
So clearly I think
I want to bring in Sandeep Sabharwal also on this one, because we are discussing Indigo. Sandeep Sabharwal, first, good morning to you. Thank you for joining us. We were discussing Indigo on Friday, and if I look at the delivery-based selling on Indigo, 22%, which means delivery-based selling was not poor. I mean, there was somebody who was selling delivery also. So is the problem Q4 or the problem is Q2? Brokerages have slashed their estimates, for Indigo. Do you think after a 20% crack on Friday, there is more coming?
Hi, good morning. I think mainly, Nikun, this is more a corporate governance concern, because just before the IPO, they paid out a huge dividend to themselves. Then they report pathetic numbers for Q2. So it doesn't gel, right? In fact, you must also have conducted interviews with them during the IPO time. They were so gung-ho about how much cash they are generating every day.
Yes.
But as the results have come out, it doesn't seem that way. That it's not that kind of cash generation, because if SpiceJet can do 240 crores in this quarter, and then they grow just 20% over 550 crores of Q3 of last year, it's not a great number which should get you such a huge premium. Like SpiceJet is 4,000 crores market cap. This company is 36,000 crores.
So what is the right way to look at Indigo? Is it market cap? Is it P multiple? Is it enterprise value? Because frankly, you cannot look at P multiple for an airline business. You should look at market capitalization. And if I look at the market capitalization number, it's actually way off.
Yeah, it's a huge, like 36,000 crores. Even when the IPO came out, frankly, I thought the IPO also was priced to perfection. And what worked well for them was that post-IPO oil just crashed. And that generated huge positive sentiments for airlines. So let's look at what Jet Airways comes out with. I still believe that Jet Airways and SpiceJet offer much greater value for shareholders rather than Indigo.
But given the kind of hype and hoopla around Indigo and that leading the entire sector forward, what should an investor do who has gotten at sort of the mid-level, not the IPO price, and who thought who was going to make double returns from here? What should our viewers do who may be stuck in the stock right now? Is it time to just cash out?
See, I saw the figures. Listing day stock went to around 950, closed at around 877 odd. So some of the people who must have bought on the first day would still be in money. But most of the people who bought after the first few days would be losing quite a bit, I think, because the top was around 1400 bucks. So I would say that there is no great value in the stock as of now. But there is no reason if you have bought in at 1300 to just dump the stock now and just get out. Because the tailwinds for the sector are still there. So you might get a better price. But on the other hand, if people are willing to consider that money is fungible and that you get out of this stock and buy into something else, then there are much better opportunities in the market.
See, Aisha, to be fair, if you're buying Indigo right now, you're buying everything at the peak. A point what we were discussing. You're buying
the best case.
You're buying the best case because crude prices will go up. Fair prices will come down. Utilization rates are at a peak and new capacity addition will only increase. So markets always vote for one thing, which is rate of change. And in the short term, the rate of change for the Indian airline industry, especially for Indigo, may not be that great. And the management has gone on record and said that, look, there will be a delay with the news. So the fresh capacity addition will not come back as aggressively as we anticipated in FY17. So it had become a cult stock, but just like stock prices, they never go to the floor. Trees never grow to the sky. So you've got to be realistic here.
Okay, that's the word coming in Indigo, and quite a bit of sharpish correction is what we've seen in the numbers. In fact, talking about that, the point that Sandeep was just making, that look at the other aviation names, they stand a better chance to do well from here. SpiceJet has reported quite decent numbers, 238 crore rupees on the PAT as opposed to 275 crore rupees loss in the same quarter the previous year. So good numbers coming in from SpiceJet, and while that stock may be seeing a sentimental rub off because of what Indigo did in Friday's session, but suffice to say that just maybe you may be seeing some green on at least SpiceJet coming in this morning. Mayuresh, what is your call? Would it be SpiceJet over Indigo right now, or would you still stay put on Indigo?
No, clearly, Aisha, I think the other point that probably we're missing is the delay in delivery of A320s. So again, I think the employee cost addition would be with expectations specifically for Indigo with the aircraft coming through. But the delay happening on that front, I think even that is going to cause some amount of concerns. When you're talking specifically of SpiceJet, yes, I think decent set of numbers. And if I do a comparison check over the last 2 quarters, they've done a decent show, both on the top line, the EBITDA, as well as the bottom line. But clearly, I think there are still issues related to how much regulatory charges and payments these guys have to do. Again, I think the delivery of the narrow body aircrafts, they're probably looking at 737 MAX aircrafts to be added to their fleet, but that will happen slowly and steadily to them. They are gaining market share. To a certain extent, I think SpiceJet stands better chance in terms of gaining market share, in terms of the entire price for competition and the cuts that we're probably seeing. It has experienced a lot worse than what we're probably looking at. But again, I think the price rise, specifically in terms of how earnings are panning out, has been quite massive. The earnings were good, so I think the stock might react positively. But again, I think I'll still have a hold on Indigo at this point of time.
Okay. Little over 8:45. Let's give you some more trading ideas. Sandeep, what about your pending ideas?
In a HDIL, which is showing good positive momentum, stop loss of 69, target of 78, and a buy in a Hero Motocorp, stop loss 2530, target 2720.
CK, your positional idea? What makes you bullish on Suprajit Engineering? Haven't discussed this one, CK, ever with you. You have a positional call there. I'm curious why.
Yes, indeed. If you look at the let's say the weekly charts over a sufficiently long period, you will find that Suprajit has been just building on its strength month after month after month, and even during the recent sharp pullback of the market, when most stocks lost nearly 25-30%, Suprajit has been very, very resilient, and it has actually chosen to go laterally, consolidate its gains rather than surrender any of its gains. So that is very clearly reflective of a stock wherein the holders are pretty well convinced that it is going to go even higher. If you look at the numbers, recent quarters might have all seen a little bit of flattish kind of performance at the gross or the net level, but I think the earnings are going to come because of the various measures that the company has taken. It's a decent, size company, 1700 market cap into a lot of exports. I think charts are very, very, very positive. I think the numbers are good. The size is decent. They are in a sector which there is some demand, auto ancillaries, instrumentations, auto control cables, etc. exports. I think all this will benefited well as soon as the market picks up. I think Suprajit will be one of the stocks up and away, and patronage is also good from both domestic, foreign investors, etc. So all in all, I think Suprajit at this juncture merits a good attention for a medium-term investor or even a short-term investor. I suggest buying it at the current levels of about 140, 145 down till 135, looking for a short-term target around 165 to 170.
Orient Cement, Mayuresh, why is that a top call?
No, clearly, Aisha, I think it's more to do with how we are expecting the cement industry to perform going forward. So the expectations in terms of demand recovery taking place over the next few quarters is something that we are very bullish on for the sector in general. For Orient Cements in general, our take is with the new 3 MTPA commissioning which has happened in Gulbarga, the sales volumes are going to increase at a very fast pace over the next few quarters. Again, I think if we do a comparison check, a lot of their cement capacities are located in the south, and they're probably selling in Telangana, Andhra Pradesh and Maharashtra, as bulk of their top line comes through from these 3 regions. Clearly, I think it's one of the most cost-efficient players in South India. Their Tewapur plant is located in the limestone reserves. It's very, very close in terms of proximity to the Singareni coal reserves. And clearly, I think even the fly ash component for both its plants comes from NTPC. The average lead distance is close to 300 odd kilometers. So what this effectively does is the lead time is reduced. At the same time, the freight costs are reduced significantly. So our own take is that freight costs expected to remain between that 700 to 750 rupees per ton. And clearly, even if you look at the captive power that the plant generates at Gulbarga, a 45 megawatt captive power plant along with a 7 megawatt waste heat recovery system. So clearly, I think it's one of the most power efficient systems as well, which effectively means that the electricity cost also stays low if you do a comparison check with a lot of their peers, including Ramco India, JK Lakshmi. Clearly, I think in terms of volume growth, we're expecting a 22% rise over the next 2 years. You're probably looking at a 28% rise on a CAGR basis over the next 2 years in terms of how the top line is expected to perform. And on the EBITDA front, we're expecting a 38% kind of rise. So clearly, I think all these factors are going to aid Orient Cements. Will the numbers be good? I think they'll be a little bit soft for this quarter and the next, to say the least. Realizations a little bit under pressure, but with new capacities coming through.
Okay, let me also bring Sandeep on in, because Sandeep also, what a lovely coincidence, he's also bullish on cement. Sandeep, 2014, everyone was gung-ho on mid-cap cement stocks. The basic assumption was Indian economy will come back, pricing power will come back, and cement capacity or cement demand will only move up. Now, pricing power has not come back, and the capacity utilization is still at a multi-year low.
Yeah, exactly. So I think that's the reason why I was not positive on cement, because finally prices were sticking around at higher levels because of some sort of pricing arrangement between producers. And that's never a great theme to buy a particular industry. But now I think things are turning out to be slightly different, where capacity utilizations are moving up, demand pickup seems to be happening. And this entire concretization of road story, along with the built-up of several cities like Amravati, especially in Andhra Pradesh, I think that will start contributing to cement demand. I believe each kilometer of concrete road requires a huge amount of cement, I think 1,200 tons if I'm not wrong. So to that extent, there is a lot of demand which is going to get generated for cement now. And the commentary from cement companies also has turned positive after a long time in terms of demand outlook. So I would say that now the cement story will play out. With stock you should buy, you should be somewhat careful about, because some of the mid-cap ones haven't corrected at all. So to that extent, there is no valuation comfort there. But I think a company like Ultratech should do very well. And in the south, a company like India Cement from current levels around 80, 85, I think it also offers a 20-30% return potential.
Okay, in Ultratech Cement, clearly Sandeep's top pick when it comes to the cement pack. Let's also bring on board Bhavin Desai, Senior Manager Equity Derivatives Analyst at Motilal Oswal Securities. Remember, we've got the expiry as well to deal with this truncated week. And Bhavin, what a stomach-churning series it has been. What is your sense? Is this Friday's rebound believable? Does it have more legs, or do you think the market is going to retest its Wednesday or Thursday's lows?
Right. Hi, good morning. As of now, it does seem that we could see further higher levels, and this rally, which is at least what it looks like right now as a short covering pullback up until the day of expiry, could actually see itself extending further in the month of February. What we're doing is that, we do understand that there are not a lot of longs in the system. We do understand that some of the moves which have taken place in last a few days, on the upside at least, have had more of short covering. So keeping our stops tight to about 7200, 7250, and creating slowly, gradually longs with hedges in place. That's the strategy that we're deploying. But it is, we're taking it as a buy on a dip market with a favorable risk reward.
Okay, so I'm going to actually take that thing forward, and I'm going to ask everyone on our panel today to vote in on one common question. Sandeep Sabharwal, starting with you. Do you think worst of the price action is behind us? Yes or no?
Yeah, for sure.
For sure. C.K. Narayan?
Yeah, I would agree. Most of it is out of the way.
Sandeep Bagle?
Not sure, Nikunj.
Mayuresh Joshi?
Nikunj, I think there is still some pain left in the system.
We got a divided house now. How do I frame my next question, Sandeep? 3 on one side, 3 on the other side.
Divided house is always better.
You like Praj. So walk us through that. Why do you like Praj?
The Praj industry has a lot of things going for it. The first obviously was the ethanol story, and the ethanol story is getting stronger. I think on Friday the oil minister has come out with a pitch that credit for setting up ethanol plants should go into priority lending. So that itself could be a positive, but that's not something which we are playing for. I think the biggest positive which came last week was that when the government has come out with new norms on the kind of water discharge they'll allow from sugar plants. I think it's a multi-thousand crore opportunity for the entire industry which deals with water treatment plants. And Praj got into this segment 4-5 years back, and it's got well established there. And it could be one of the biggest beneficiaries of this, because it already works with sugar companies on the ethanol plants, and now this will be a direct. They have a lot of comfort with sugar companies.
So Praj is changing the business model. It's not just making machinery for ethanol; it is also making machinery for the water sector, and that's where you think the opportunity is.
So that already had happened,
okay.
But the big impetus from the domestic market had to come, and it was not coming. So I think that's what will start now. So market cap is 1400 crores. They have got 300 crores cash on the book, zero debt, and no capex required till a 2500 crore turnover. Right now standing at 1000 crores. So I think a lot of cash generation will happen. They are very aggressive dividend payers. Like most of the profit they generate, they pay out as dividend. I think outlook is really interesting. I think one of the very good stories for the next few years. And when we talk about themes, what could be the big themes for the future? I think one clear theme is pollution control. And which companies will benefit out of pollution control is something which we have to come out with. So on water pollution side, this company is there. Which other companies will come out for other segments? That's something which we have to search.
Interesting theory there. Bhavin, I want to come to you. Not long term, but what are the intraday calls that you're betting big on?
Well, not so much of intraday. Of course, 3 sessions left, so not a large horizon. But one theory that we're working with is that the gains that we saw on Friday could very well get extended into this week, and we might actually see a larger moves coming in this truncated week of expiry. So one thing that we're doing is we're buying out of the money calls with no stop loss and intrinsic value target. So something like an M&M where we're expecting 1260, an action price action up to 1260. We're buying 1220 call on M&M for this series itself, keeping no stop loss and keeping targets close to 40 rupees. And apart from that, you know that there's going to be holiday tomorrow, and apart from that, a fast decaying time value. So one way to counter that is ratio spreads. So we're doing a call ratio spread on ICICI, buying a 240 call, selling 250 call, two lots or twice the quantity, and keeping targets close to 7,500 in profits, and stop losses are kept in absolute money terms at about 850 rupees.
Okay, 2 minutes to go for the first pre-open rates. We could be in for a decent start. Now you got to just take baby steps. Surely bulls have managed to engineer a smart comeback on Friday. Globally, things are looking calm. And the biggest hurrah for global financial markets is that the best friends for stock markets have, of course, been central bankers. And central bankers are saying that they are standing by. They will be the backstop. Mario Draghi has said that he will pump in more liquidity. Those are the comments which are again coming from BOJ. And hopefully, we could also hear something on the similar line from US Fed later this week when they would be meeting for the first policy meeting. So yeah. In terms of mood, things are looking calm, things are looking settled. But given that how one-sided the volatility and the ferocity of the fall, I think the damage really has been done. It will take this market really a lot of time before it can really recover from this so-called gut-wrenching fall. 2016 on all count has been, we've been off to a horrible, poor, pathetic and a disaster start. What are we working with? Well, we definitely would be monitoring Indigo. The devil is always there in the detail, and that's what I think markets realized on Friday when they reported their Q3 and Q2 numbers. Nothing wrong with Q3, but Q2 numbers is where big question marks have been raised. Since Q2 was an aberration, Q3 numbers and the FY16 numbers now have been downscaled by most of the brokerages. That's one story. ITC, another quarter of pain, known pain, which is cigarette volumes, which is the cigarette business, which is the mainstay for ITC. That business continues to contract. I'm hopeful that banks will be able to continue the upward march. If Axis Bank numbers are anything to go by, there seems to be an indication that the NPA write-off or the asset quality write-off may not be all that severe. Okay, first rate, Monday morning, it's a truncated week and we've got a 49 points uptick on the Nifty, 63 points up on the Sensex, 96 points up on the Sensex. Now I'll just very quickly establish the first pre-open rates. ITC, Indigo, these are two very important numbers, and then HDFC Bank later in the day. Three important number reaction I want to establish. HDFC Bank ahead of number, the first rate has not come out. ITC, number reaction on your screen, 303, and Indigo 20% down on Friday. That's Kane India for you, 110 rupees. Indigo, the first rates, I'm afraid they're not out. 968 rupees for the moment.
Yeah, and the currency is seeing just marginal strength kick in the opening rate, 67.53 on the rupee. That's where it's kick-started trade. But yeah, slew of earnings to react to. Reliance Communications, wherein the net profit has come in at 171 crore rupees as opposed to a comparable of 156. Relcom starts off with a gap up of about 3.5%. Shimaru Entertainment, and decent numbers there, a very tiny base, but yeah, 13.5 crore rupees is the patch this time around. Supreme Petro, a turnaround quarter this time around. Mahindra Holidays too should be reacting to its numbers. That stock will just come up for you on your screens as well, and the first rates haven't trickled in for this one. SpiceJet has posted some decent numbers, so look out for this one. This may just stand out from the rest of the aviation pack, and SpiceJet has had a gap up start, 4.5% higher at a time when the other peers like an Interglobe Aviation are rumbling under pressure. Can a disastrous quarter, much unexpected lines, but the profits have shrunk to just about 8.7 crore rupees, a gap down start. although, suffice to say that KNS, in any case, as a stock price also shrunk. But yeah, some more pain to go perhaps. Some of these, small cap companies have delivered pretty decent set of numbers. So look out for what, say, Force Motors does in trade today. Quality Dairy as well, Unichem Labs. These are some of the smaller ones which have come out with a decent set of numbers. Persistent Systems, RS Software, by the way, the PAR has doubled this time. So look out for these. A gap down start coming in there. Okay, there seems to be a bit of a problem with the top line. It seems like there is an extraordinary component in the PAR. Stand corrected at that. A KEI Industries, Ashoka Buildcon, etc. These are some of the interesting earnings to look out for. But in the meantime, let's also bring on board Manisha and talk about which way the currency markets are headed. Manisha, some stability, at least in the opening ticks. Can we see some more strength building?
It looks like that because the previous week saw some very good gains, 1.6% up, and we have opened on a positive note today as well. So after hitting a 68.17 in the previous week, we only have seen a string of positive moves coming in for the rupee for last 3 sessions now. Report from the India rating says that they are looking at volatility to continue in the global markets, and the range that they are working with is between 67.25 to 68.15 for the currency. The 10-year benchmark yield also has been quite volatile. You have seen a mixed signal coming in for that. On one side, there, of course, is a constrained liquidity that you are working with, but the global commodity prices are still soft as compared to previous year. You have seen the global government bond yields enhance as well. Markets would take cues from that, and a range that you are expecting to see this week is between 7.58% to 7.68%. It is an important week because you have a couple of important central bank meetings being held here. You have the US Fed meeting, which concludes on 27th of Jan. Markets are anticipating some economic update from that. And the Bank of Japan meeting on 28th Jan will come out with details on inflation and further stimulus in case that the Bank of Japan is planning out with. Important also is to watch is that RBI has been intervening in the Indian bond and the currency market here. They have bought GSEC worth of 143 billion up till this year. And also if you look at the Forex reserve, they have declined from 352 to 357 in by 15th of Jan. So there clearly is intervention that the RBI has been doing in the currency markets to contain too much of volatility there.
Right, Manisha, thanks a lot for that. Now, what are dealing rooms betting on for that? Let's go to Ajay.
Good morning, Nikunj. HDFC Bank is a result play which dealing room guys are recommending. Most of the analysts on the street are expecting a NII growth of around 20%. But sources on the street are indicating that it could be a big 5 to 6% beat as far as the NII growth is concerned at a time when asset quality will be stable. So they are recommending risk reward as being favorable for this one, that if the market supports the SGX Nifty remains in the green, this is one long call which should be generated ahead of the numbers. Apart from that, Torrent Pharma is one stock where, a lot of big HNIs are creating short positions. In fact, Kotak did come out with a report also 1 month back saying that this is one company, large cap company in the pharma space, which doesn't have any, new product pipeline FY17 onwards. So it's as if the entire pipeline is drying up in one single year. So there's a, big area of concern for Torrent Pharma. The stock is already ticking lower, but institutional guys are likely to follow. And the last one is a, mid-cap auto ancillary company, Hydro SNS, 700 crore market cap. But the numbers which have been released over the weekend, 40% top-line growth, 100% PBT growth, may keep a lot of HNIs, interested in this particular stock. So watch out for that one as well.
Okay, we're going to leave it at that, Ajay. And Sandeep, HDFC Bank, that's going to be the key one to look out for. Stable as always, or could we expect something unique in the commentary, positive or negative?
So I think last quarter's commentary itself was positive. And I think they have become much more aggressive in lending as they become more comfortable with the macro situation, as other banks have turned wary because they have to handle their balance sheet issues. So I think HDFC Bank could surprise on the positive side this time. And that's what I think one should be looking for. And there's no scope for disappointment, I don't think so, because if 20% NII growth is the expectation, and that's something which we have seen a lot of banks deliver. So I guess HDFC will do better than that.
Okay, now, what did you make of Axis Bank's commentary? That was much positive than what the street was fearing. We thought it's going to be a disastrous commentary when it comes to the NPAs, etc.
Exactly. So if you look at Axis, 3,15,000 crores of advances. On that, if RBI says you make additional 1,000 crores, it's nothing great. Like 1,000 crores on 3,15,000, 0.3%. So if RBI has done its homework properly, then we shouldn't be too much scared of what's happening in the economy. If we believe that RBI has missed out a lot of things, then one should be concerned. I would say that RBI today has lot more credibility, and to that extent, whatever has been done is something similar we could see in other banks where concerns are there. So to that extent, I would say Axis Bank this time also was much more clearer than last quarter. If you remember, last quarter they hid something in the initial release and that came out in the conference call. This time they went all out to make things clear. So I think that's a positive. So overall banking looks constructive in any case. And to that extent, I would say that people from the battering's be done. And now is the time to pick up these stocks.
Some clarification is also coming from Axis Bank. Let's go back to those flashes, and I think that's fresh off the press this morning, which is they've given a clarification on the companies where they have an exposure, or groups in this case. Now, Reserve Bank of India has come out with a long list that if you have exposure to these 150 names, you have to come out and then be aggressive in terms of your NPA recognition. So some clarity has come out of that, and 1.5% of banks' exposure to some of these groups already has been classified as NPA. So they are really doing a good job of chopping things around. Now I have a last question on HDFC Bank. Historically, HDFC Bank has traded at a premium to other banks. Other banks have come down, the premium has only widened. So the scope for HDFC Bank to go down may be limited, but the scope for HDFC Bank to go higher also is limited because this formidable stock has not corrected at all.
See, one is that the correction has not happened, that's true. But the other part also is it's gone through almost a year of consolidation with no returns, whereas it's actually delivered a 20% profit growth, whereas other banks' profits have actually gone into doldrums. Secondly,
I like the optimistic side of yours. Every time I have a slightly bearish tone, you'll spin it around with the tone of optimism.
It's HDFC Bank. He commands it.
And finally, they raised 10,000 crores, right, last year, beginning of last year, and that took down their price to book also. To that extent, I think people have been wary of banks, and if you are wary of banks, you are reducing exposure, then HDFC Bank's exposure would also have got reduced. But there's no case to be pessimistic at this point of time.
Mayuresh, Joshi, do you want to comment on this debate, whether it's HDFC Bank or whether it's Axis Bank? Which way should one lean? One offers value, the other one offers consistency.
No, clearly, Nikunj, I think what the management has done specifically with Axis Bank, I think the cleaning up was warranted. They've done the right thing. The commentary was extremely optimistic. So again, I think I've always maintained that HDFC Bank is a steady performer. It's going to perform that way quarter after quarter. So there's not going to be no respite when it comes to how the NII growth is expected to pan out. The NIMs probably might compress by 10 bips this quarter because of the base rate revision of the cut that we've probably seen. But consistency is the key word for HDFC Bank, and it always delivers on all key parameters. But clearly, I think private space and a bunch of these banks is something we look at. So we remain extremely optimistic on banks like HDFC Bank, and specifically even on Axis Bank after the commentary that they've probably given out.
Okay, that's the commentary coming in on HDFC Bank. So Sandeep, net, the pain is already in the price when it comes to PSUs, or do you think there could be something more disastrous lined up?
I think most of the banks, the pain could be there. So I think especially SBI on the larger banks. Now PNB is something which we have to watch out for, because that's got the highest stressed asset as a percentage of total, I think advance 18% odd I saw last time. So there I don't know what can come out really. So it's time people focus on more of the banks where there's more clarity. Like Axis is also cheap, like 600 stock available at 400 odd. SBI fell from 350 to 180. So there's no reason to go down to find value. And you're finding the value in the larger ones.
Okay, Sandeep, always good chatting with you. Thanks much for taking the time out. Let's just revisit what the pre-open rates are indicating for us. And a rather tempered start, but yes, positive nonetheless. The Sensex indicating a start of about 100 points up in the green. The Nifty as well has now picked up more weight. So 7450 plus levels is what it's indicating right now in trade. Lots of stocks which are going to be in focus, and we've been highlighting those for you. Look out for SpiceJet, very positive earnings coming in there. It's a fourth consecutive quarter of profit, so look out for what SpiceJet does. It's in any case indicating a nice smart gap up move, 9% higher for SpiceJet. Persistent Systems as well as the other one to look out for. And yeah, ONGC, which has gotten a green nod for about a sizable project for KG Basin infra project. So look out for that. Again, disastrous set of numbers. And Adani IOC, GAIL and Gujarat Gas are to bid for a CNG license. This is what newspaper reports indicating this morning. So this entire gas pack is going to be extremely interesting to look out for. That's Adani IOC, a combined GAIL as well as Gujarat Gas, which are looking to bid for CNG licenses. So this is going to be a very interesting long-term story building in.
You know, Aisha, the broader question you would ask yourself is that is worst of the price action behind us. I'm hopeful that crude has stabilized. No fresh patch of economic data, poor economic data has come out from China. US markets have stabilized. So factors which were adding to volatility, they are on our side now. Central banks, frankly, central bankers have been the best friend for equity markets. They are saying that, look, we are there for you. We are the backstop right now for this world. So that's very, very comforting. Where I have my reservations about some amount of volatility not going away is in the mid-cap space. That's because there are no buyers there. Who's going to buy into mid-cap stocks? HNI investors who've lost money and domestic institutional investors where we know that inflows haven't started, and the margin of safety is with the large-cap stocks right now. So mid-cap, not so sure. Large-cap, I get a sense that maybe the worst of the price action is behind it. I could be eating my words if volatility comes back, but valuations are on a side in large-cap stocks.
Okay, fingers crossed on that one. But let's get in some top trading ideas then as we step into trade this Monday morning. CK, what's top on your radar?
I would run with a long position in GAIL at 368, stop 362, targeting 380.
Sandeep, what about you?
Aisha, buy in a Petronet LNG, stop loss 245, target 266.
Mayuresh, what's looking like a good short-term bet perhaps? I'm going to make you stick your neck out on that one.
Very difficult call, but clearly I think I'm very optimistic on the cement space. I'm very, very optimistic on large cap names like Ultratech, where I believe the numbers were excellent. And our belief is even in the media space, Z had come out with an excellent set of numbers. So I think if some rebound is expected to be seen, I think Z can offer good value to both long, short and medium-term investors as well.
Gentlemen, stay with us. 50 seconds to go. This is a truncated week. We start today. Tomorrow's a holiday. We come back on Wednesday, which means one more less day for expiry, and that will have its own, pull and push pressures. What's important is that we've put a stable week of trade behind us. I think stable is the word. I'm not very optimistic because the world is suddenly a fractured space. The selling has been so intense that a recovery on Friday was always on the cards. Can bulls really engineer on that? Can they really build on that? That is something which is clearly debatable in this kind of an environment. 20 seconds to go and we'll get the first rates. Monday morning, we are hoping for some degree of green, at least for broader markets. Indigo will be an important stock. HDFC Bank numbers will be, HDFC will be an important stock ahead of numbers, and ITC will clearly be reacting to numbers today. For the Nifty, 45 points up. It is not a bad start. 49 points up for the Nifty, a start above 47.50. Which is quite commendable considering where we closed on Thursday. For the Sensex, it's a century, 0.5% up for the Sensex, and about 34 points up for the Nifty. Newsmakers now. Indigo, it was beaten black and blue on Friday. 20% is what it lost, and another 2%. That makes it 22% in 2 days, 28% in just 5 trading sessions. It was a 4-digit stock. It has now become a 3-digit stock. And look at the selling intensity in Indigo. Markets are just too unhappy with their disclosures now. They'll have to learn. I mean, they are a recent listing now, but you better learn in this kind of a market where disclosures are very, very important. Let's move away from Indigo and talk about ITC. What is the first trade on ITC? ITC came out with poor set of numbers. Numbers came on Friday. Markets will react to those numbers today. 308 for ITC. Persistent. There is impressive sequential growth in between quarter. Markets responding to that. Yes, they are 623 rupees for Persistent. And what about banks? They hold the key right now. I'll just quickly go through some of the prime banking movers here. Axis Bank, HDFC Bank ahead of numbers, ICICI Bank, and then good old State Bank of India.
Okay, those are some of the stocks which are in focus, and banking is doing pretty okay this morning. While we've had a stable 0.5% uptick coming in, the Bank Nifty is good to see an 0.8% uptick coming in for the Bank Nifty this morning. Couple of other stocks which are going to be in focus: the Adani IOC combined, GAIL, considering it was a top recommendation by Dr. C.K. Narayan as well this morning, so I'm going to look out for that one as well. Gujarat Gas, which are looking to bid for a CNG license. These are some of the newspaper reports, and that is what they seem to be indicating. Ken, a disastrous set of numbers this time. So let's see what Ken is up to right now in trade. ONGC, they've got a green nod for KG Basin Infra project. Persistent Systems, that is going to be reacting to its numbers. And SpiceJet has had a flying start, very smart performance coming in there, 7% higher for SpiceJet in trade right now. Just a couple of other stocks which are in focus as well. HDFC Bank ahead of its numbers today. Let's look out for that one. HCL Infosystems, Intellect Design, Consign Nerolac, Everready. That's going to be an interesting one to look out for. And a slew of other mid-cap earnings which are slated to come out with their numbers. Reliance Communications is something which should be reacting to its numbers. So let's see what the stock is up to. Just very tempered, much unlike what the pre-open rates were indicating. A Shimaru Entertainment as well. A Supreme Petro, Mahindra Holidays. You've got Quality Dairy, Unichem Labs, and Force Motors, which should be an interesting one as well. Should be seeing earnings reaction kick in. So Force Motors should come off you on your screens. These are some of the smart performers, good numbers, and the street is rewarding and much cheerful about those. RS Software as well is another one to look out for, and KEI Industries as well. But Mayuresh, just closing comments for the benefit of our viewers who are just tuning in. Is it time to start nibbling back into the markets?
Oh, clearly, yes, Aisha. And again, I think the uncertainty and volatility in the markets will continue for some length of time, but that should not deter long-term investors away. So I've always maintained my stance. If you've got fresh investable corpus, I think anywhere between 10 to 15% is something that you should be putting in markets across sectors. Be stock specific. I think the large caps are available at a very, very good price at the current juncture. So I think if you buy a bunch of stock on declines, wait for declines to probably happen, for the markets to stabilize. But clearly, I think time is as good as investing at least 10 to 15% of your investable corpus in qualitative stocks.
Okay, Mayuresh, good chatting with you as always. Thanks much for taking time out and joining in today. That's the view then from Mayuresh Joshi, fund manager at Angel Broking. Some stability coming back. And yeah, it is the broader markets which are rebounding a little.